We have a USDA crop report on Friday. Let's take a peek at it and then get into some charts, especially cattle we want to take a look at. Here's the estimates heading into the 11 o'clock numbers on Friday. Note that the corn sees a small uptick on our ending stocks here on old crop. This is an export adjustment, of course, raising that up. Beans, again, slightly as well, tied to exports. Now, as we go to new crop, you're seeing quite a bit of a jump from last month to this month. That's because of that extra 1.5 million acres and the extra stocks they found in that June 30th report. Soybeans, though, off a bit from last month. We're looking at about 11 million bushel drop. Wheat jumping here, especially when we get to the production numbers is where they're coming up with that, increasing this here by some 19 million bushels. So looking at production, again, we have that acreage increase taking us from 14.86 to 15.16. For some reason, I don't know why the street is trying to use a 180.4. I doubt it. USDA is going to stay with this 181. That's not a very surprise if we see 181. I don't know why. Maybe they're setting it up for it. Same thing goes for beans. I don't know why they would guess something less if they didn't want to create a look of bearishness. So anyway, you get a production number for beans that actually comes down. Also remember their acreage was lowered by about 500,000 acres on June 30th. Now, all wheat production was increased from last month. Winter wheat, as you can see, is where the bulk of this comes from. Spring wheat was not in the number here last month, but they are putting a strong 522 million bushels on that, up considerably yet from last year. Even the durum up from last year when compared. So, world numbers. This morning, Brazil was out. They pretty much stayed unchanged with 147 million metric tons. USDA last month, 153. Everybody thinks they're going to creep down again. They seem to only move 1 million metric tons at a time. Still a large, almost 6 million metric ton difference from 153. Corn, they did come up 1.8 million, but they're still some 6 million under this number from last month. Everybody thinks they're going to come off at least 1 million. Argentina, they've got to come down. Argentina, it's a wreck, that second corn crop. You can't even get a bid out of Argentina after October 1st to buy corn. So they need to be moving lower on these numbers. Otherwise, soybeans probably going to stay unchanged. As we go to the world numbers, old crop, there's not going to be any excitement here. Really, everything's within 1 million metric tons. It's where you go to new crop that we might probably see something here on this old crop, new crop world stocks numbers. In corn, they're increasing. Again, that's because of the U.S. But Ukraine, it's a wreck. And the USDA won't acknowledge it yet. Here is Ukraine. Continues since April. This is through Sunday, July 21st. There's no rain. Look at the heat. Continues to say, this is Ukraine. Stays right on top of it. Where do they grow their corn? Right where I've been showing you. That's where the corn comes out of. Ukraine beats us over the head on exports, sells the corn into Southeast Asia. We're going to get some business. And Brazil, as far as Argentina is concerned, they're not going to be so hot selling. They're going to want to hold out. And same thing, Brazilian farmers, they don't like the prices they're seeing. There's going to be some locking away, and we're going to see some rallies in corn because of exports. We can get off of staring at domestic here production. We're already working a 182, 183 production number with stocks to use numbers the way they're trading near $4. So, something I want to show you here. Here's December corn. Yes, measured move theory. If we measure the 1212 of 40 cents, add that to wave forward, we can still get about 385 out of this thing technically, but that'd be a 183, 184 corn number. But I want you to see how bad the USDA is. And I'm not talking years ago. I'm talking recently in 2020. The USDA never saw the demand coming. We were sitting at the end of July, 1st of August, something like $3.10. Within 7 months, we were trading $7.40. Why? Explosive demand took this thing. Well, you can say, well, it's a cheap U.S. dollar that did it. Well, maybe, but not necessarily. Let's go take a look at the dollar chart right now. We'll go farther back. Hit on the CPI number, hit trendline support, close just above it. We have PPI tomorrow. See the potential for a Federal Reserve rate cut of 2 of them. September and December on the table right now. There's some talking 3 of them. And if we take this dollar weekly chart, and we break this trend line here, we start getting under 103, we send this thing right down to the par level, we could see some exports improve considerably. Now you might say to yourself, yeah, but if you look at that corn chart, the dollar was cheap. No, it wasn't. Look at here, high in 2021. Look at the high in 2022. It occurred in April, all right? When they need it, take a look at where the dollar was. Here's 2022, April. It was climbing. Granted, corn did fall out of bed later in the year of 2022, but we had a stronger dollar in 22 than we had in 21. and yet corn went up. So the point is, we are the warehouse of the world until everybody runs out. Then it doesn't matter what our dollar's doing, corn rallies. So we'll see. These are scenarios that have to come into play soon. Whether it's August 15th here or July 15th, something should come into play and get some kind of rally here on corn. And I think it's an export rally, and the USDA is going to be completely complicit of missing not only the corn demand, but that we have a president that is not cognitively straight. Okay, so whatever. I probably tuned a few people out right there, but it's the reality. November beans, fifth wave down, suggests we can still get to about 1035, 1040. How do I come up with that? Well, when you cram the charts and you do measured move theory, you measure this, you get a bar there. You see this bar I just put there? You take that bar, you move it over to here, and C equals A down here at 1035, 1030. So probably more weakness to come. They'll probably have it over with by tomorrow, possibility. Kansas City wheat had to go down all the way to March lows, did not make a new low, but had to go to the March lows before sharply turning up today, especially with the dollar showing its weakness. Chicago wheat had to bump just the recent lows by 0.5 cent and turned up, but the performance into the close was poor because tomorrow is a WSDA crop report. Crude oil, I think this was wave 2 at the 786. We've been showing this forever, 84.5. We now have seen a break, got a 2-day rally. In theory, the dollar's probably a short tomorrow. Then it moves back lower again and challenges this moving average support near 80 bucks, and then it bounces off of that, and then maybe breaks even hard lower later on into the summer, unless we have more hurricanes later on. Cattle, you've got to see this. August cattle, hard break. 2-day bounce, pathetic. Today closing below moving average support. You put this thing below 180, cattle are in trouble. Take a look at the continuation chart. You put this thing below 179, basically 180, you're breaking a major uptrending support. Something's wrong out there with these cattle, especially feeder cattle. Can never do major moves up to new highs. This was a 786 of this and this. This is a 786 of this and this. And it couldn't even do a 786 when we were looking for a trend line, but we did make it to trend line when it got cheaper. And what do? Bang the trend lines on the bottom side. You put these feeders under yesterday's low, you got problems. This wave 5, wave 3, it can be ugly, and it's going to be another one of those times where, why is it going down? It shouldn't go down. There's no reason for it to go down. There's no cattle out there. Cash prices are good. I know. But the board just does this sometimes right ahead of the cash trade rolling over. Now, this is not to scale for time. It is not to scale for price yet. This could take into October, November. I put it here because I didn't want a whole bunch of blank chart. So you just put the wave here. But we could do, a complex wave strategy here and burn time until we get, like last year, peaked in September and falls out of bed into the 1st of December. We'll see. History has a way of repeating itself. It just, doesn't rhyme perfectly. This is Eugene Graner with Heartland Investor Capital Management. I hope you find this information useful.